Okay, welcome everyone. I mean, the best for last, as usual. It's the biggest pack, and it's not just because we are the most number of people, it's also because it's the most number of relevant topics, because at the end of all the game that we talk about, we have been cooking, we have been speaking about what's happening on Cardano, what's possible, but at the end of the day, what really matters, so to say, I come from the financial world, is where actually capital meets investment and return. And we're going to talk about those opportunities together with some heavyweights, and I don't mean the weight in that sense, I mean because they have something to talk about, they have real stuff that has been done, real stuff that is possible, where we can actually invest and work the capital. So thank you everyone for joining me in this panel. And without further ado, maybe a brief elevator pitch from every one of you, and give the word to the youngest, Nikhil.
So, good afternoon, everyone.
Nope.
I don't think that's working.
Okay.
Oh, there you go.
Yeah.
Try again. Good afternoon, everyone. My name is Nikhil Joshi. I'm the COO of EMURGO, which, if you've been around for the last couple of days, you should know by now is one of the founding entities of Cardano. Our thing is very much anchored in RWA tokenization, building on Cardano, looking to bring liquidity to Cardano, interoperability, and really building out a Web3 finance stack of tomorrow.
Excellent. Florian, please.
Hi, everyone. Is it also working? Yeah. I'm Florian Volery, co-founder of Liqwid Finance, the biggest lending and borrowing protocol on the Cardano blockchain. We launched in 2023, already 2 years of mainnet and more than 100 million of assets on the platform. And our goal is obviously to offer DeFi lending protocol on the Cardano blockchain and bridge TradeFi with DeFi.
Excellent. I'm Bruce Jackson. I'm one of the managing partners at Members Capital Management. We manage portfolios of reinsurance, and even people in the traditional world aren't that familiar with what we do. But to fast forward, so our clients use us to invest in an asset class that's uncorrelated to anything else. The really neat thing is you can actually buy a tokenized version of it on the new London Stock Exchange digital exchange or in Archax, and you will hold it in tokenized form in a Cardano token in your wallet.
Amazing.
So my name is Monty Metzger. I'm CEO and founder of LCX. LCX.com is the leading Cardano exchange, so for Cardano native tokens. We invested early in the infrastructure and are proud to have listed most Cardano native tokens and established our beloved Cardano community as a core part of our platform. We are now 7 years old, and we've built the infrastructure to bridge traditional finance with blockchain innovation and doubling down now on tokenization. And we had a little pilot project a few years ago called Diamonds, tokenized diamonds. And I'm now proud to announce that we have, just today, relaunched and rebranded it into Total Finance, which stands for Total Tokenization. We're building the infrastructure to not only tokenize diamonds, we became the largest tokenized diamonds marketplace with Diamonds, and now we are expanding that to all different types of commodities, energy markets, commodities, rare earth elements, and we're building strong on Cardano, and that's a key announcement we now did together with the Cardano Foundation just today.
Yeah. Yeah. I mean, it's amazing. Come on, Sheldon.
All right, is it working? There we go.
Yeah, we can hear you.
Well, hello everybody. It's a great privilege to be here on stage with so many esteemed gentlemen. Yes, so my name is Sheldon Hunt. I'm the founder and CEO of Sundial Protocol. So Sundial is a very interesting piece of infrastructure that we're building out. It's essentially Cardano's first layer 2. It is a hybrid UTXO chain that plugs into both Bitcoin and Cardano. So we believe we are marrying the best of both chains, bringing programmability to Bitcoin and liquidity to Cardano. And very excited. We are institutionally focused and looking to launch early next year.
Good evening, everyone. This is Vineet here from Sigma Capital. Sigma Capital is a $100 million fund based out of Dubai. I've done 2 funds before this, 300 plus investments. Not invested early stage Cardano, but been in a lot of competitors like Sui, Casper Labs, and a lot of stuff. I've been investing in Web3 startups. I think the last two funds were more focused on how can we get capital in and get great returns for LPs. What we're moving away in the new fund is, I don't think crypto will become big unless we don't get three things done. One is get real capital. We need to get traditional capital in. That capital went into ETFs, and that capital went into treasury companies. That needs to come into venture capital. Otherwise, we don't have those big companies anymore. We need to get real adoption. Actually, there are no users in Web3 yet. We need to get to those companies like Reliance, which have 700 million subscribers, to see to it that we get 50, 100 million users in here, with every protocol. So we're trying to do that. One is get capital, get real users, and finally get real founders. Hackathons have been kids coming in and taking $40,000, $50,000 and going home. We need to get entrepreneurs here who solve real-world problems. And that's what we are doing with Sigma Capital, building the real VC in the long term.
Excellent. We're going to make sure that you leave here in full in love with Cardano, Vineet. You're not going to make the same mistakes again. Okay?
I did a few investments in Cardano, but not a lot. I wasn't there during when the ICO happened on Cardano.
10 ADA doesn't count as an investment. So amazing. I mean, thank you very much. I think we all heard that there is like a lot happening. Let's deep dive a little bit more. I mean, coming from the old world, traditional finance, into the new Web3 space and what that entails. Let's dig a bit deeper what that means and what the journey is. And that's where we build our questions around. And I mean, talking about bridging the gap and what actually, how we can use what we learned from the traditional frameworks and bringing that in the new world. I mean, like RWA. I mean, for me, RWA had a different meaning as today. So what happened? So what are actually really the key elements that we need to look into to make it happen on a decentralized infrastructure? And maybe the one is just cooking at the moment a lot. Monty, you maybe want to highlight a few of those experiences?
Absolutely. I mean, we are talking about real-world assets, but we've seen different types of adoption. Currently, there is now a lot of financial products being tokenized, and we do see different asset classes being put on chain. And on the other hand, we had been always, from our side, working on like real assets, which you can really touch, like diamonds, gold bars, silver bars. We launched the largest tokenized diamond collection on Cardano as well, which was sold out immediately. And so we do see different asset classes being tokenized. And probably the most successful tokenized asset at the moment is money. So this is the first phase of tokenization, and already now with the current interest rates, a true killer app with more than 500 million active users worldwide, and then the companies behind making massive profits, obviously. Then the second element is really these all different assets. And ultimately, what we see in institutional adoption is we're breaking down the barriers because the frameworks which are there are very analog. Settlement takes several days. In commodities trading, sometimes up to 30 days. It's hard to verify. And also the settlement itself is something which can't be verified afterwards. So these are all problems which we know we can solve easily with blockchain technology. And so that's why in the next couple of years we do see institutional adoption happening by transforming assets. So in the future, assets won't just move, they will think.
Yeah, absolutely. But thank you for that. Absolutely amazing. I mean, taking it one step back now, having all these new opportunities and possibilities that you are realizing. I mean, Florian, you're one of the guys that looks deep into the number and what's behind. I mean, we used to do due diligence. We used to have like performance analysis on the investments, KYC, all the compliance stuff, knowing from the traditional financial world. How does that influence and how do you use that in your environment, being like one of the few lending opportunities that we have on Cardano?
So I would start saying that DeFi, it's an extension of finance. For me, we are not reinventing the wheel. And I think what will perform in DeFi is taking what performed well on traditional finance and put it on the blockchain. And in traditional finance, everything is linked to the trust. You give money to a bank because you trust them. So banks have regulation. And one of them, for example, when you think about is a reserve. Every time we have a stable coin that is issued on the blockchain, what are the reserves? Or when it's a real-world asset, how do you ensure that the real-world asset exists somewhere to back the assets on the blockchain? Another important topic is the oracle, the pricing, the valuation. How do you ensure that the assets on the blockchain is priced at the same valuation that you have it on the TradeFi? And also, if it's involved in structured product, for example, like lending, it's the same as TradeFi. How do you liquidate this position? How do you recover money, from the collateral into stablecoin or fiat money? So all of these questions are, I would say, very important in the product design on any DeFi. And this is, I would say, where I think most of the people are working on, is to bring trust, have the collateral, and the correct valuation.
Okay, understand. Anything to add? Anybody else wants to pitch in something where is it hindering you to do business, looking at the so-called classical requirements in order to launch products? Anybody?
I would say it's hindering us. When you said old and traditional, I thought you were going to come to me right away. The reality is that we
live in the Bermuda, so we come from the traditional world.
We're a very traditional asset class. Like investing in reinsurance is something that's been done for 350 years, but only the biggest pension funds and endowments in the world do it actively for the last 30 years. And that's where we come from. But mostly we come from a world that's heavily regulated by securities exchanges, that we have to run the gauntlet of Hannover Re and Munich Re and all the big reinsurance companies who have their own process that's worse than a regulatory process. So we come from a world where that's expected of us. And now we're trying to learn about how we can scale. And scaling means, how do we become attractive to a client that is web central, a web basically centric mentality, T+10 second world, which is not. So we come with this huge experience. Like I have personal relationship with most major securities regulators in the world. We understand that bit. We're looking for partners who can help us translate that into distributing our product out into the Web3 world, because distribution is everything at the end of the day. And that's how we're doing it. And one of the things that I watch the banks. So let's be frank, they always win. Doesn't matter what happens, they always win. And people keep saying, well, this is so great, when's it going to scale? It's really easy to answer that. When it's profitable for the biggest banks to sell investment products and to deal with their clients on chain, and they can incent their advisors to direct all their commerce on chain, that's when it scales, when they can make money doing it that way. And we're not that far.
No, we're not that far. I mean, and that's a perfect segue to the second one. I mean, is there anything else that hinders this large amount of capital inflows into the Web3 space? I mean, looking at you, Nikhil, I know EMURGO is doing a hell lot, and we heard about from Phil this morning about what EMURGO is doing together with other entities. Anything to highlight on this? What's blocking the money to flow?
Well, as soon as we say the word institutional, you can't go much further without saying the R word, which is regulation. Sorry, very boring, right? But it's so. I also coming from a traditional background, as most of us do, and as you alluded to, Andres, RWA meant something else. It meant risk-weighted asset. It was all about capital. And even in a traditional space, the rate or the pace of engineering for different types of financial products and how they work, the regulation could not keep up with that. So the regulators were always on the back foot, and therefore always trying to apply some kind of square peg, round hole solution to that type of financial product innovation. Now, in this space, that innovation is supersonic, right? So you've got to be a little bit empathetic with the regulators, that they're never going to be able to keep up with the rate of change that's happening here. And that's unfortunate for them. But they are, if all you've got is a hammer, everything looks like a nail. I would say that the regulators need to get rid of the hammer and find something else, because there are certain risks in this space, but there are certain different risks. It would be cool if the regulators actually applied, for example, capital relief for the use of innovation, as opposed to being, highly skeptical of it. So regulation is there. I would say it's inching forward in the right direction, but that pace of inching forward is different from one jurisdiction to another. And that ends up with an unlevel playing field, right? And I'd say, we're seeing very positive movement coming from the US, right, which is good. But it is an unlevel playing field at the moment so far. And that creates a reticence on the part of institutions and how they want to invest, how much they want to invest, and when they will. The other thing is that you get this thematic feedback from regulators, which is, we like blockchain, but we don't like crypto, right? And you have to you say, well, actually, those two things go hand in hand. And by the way, just because you don't like crypto, don't throw the baby out with the bathwater, right? So and by the way, Fred and Cardano Foundation do a fantastic job on bringing regulators up the curve. There needs to be much more of that engagement to get a level playing field. That, for me, is a key component to opening the gateway for institutions to come in. There are other components, of course. Product market fit would be the next one on my list, but I'll stop there.
I think that's one of the main points, and I think Vineet has mentioned 3 other points. You want to further elaborate on those?
Sure. So for me, when I talk about institutional capital, it is about family offices and others coming into blockchain. Now, my problem is much before regulation. I completely agree that regulations are critical. There are 2 more things that are important. One is education, and second is adoption. When I go to these family offices, they say we have invested in Ethereum and this and that. I ask them, what does Ethereum do? Trust me, 90% of these guys who have bought Ethereum don't even know what it does. And try this as an exercise next time onwards. So the point is, first I have to explain to them, Ethereum is not Bitcoin. Bitcoin is a store of value, and Ethereum is a startup that basically builds smart contracts. It's like Uber, like Facebook, and Aave is not Ethereum. Aave is something else. So one part is the education part, and the second part is the adoption part. I was in FII Miami in February, and we were in a group of 30 people where all the senators were sitting, and they were talking about the stable coin bill. And they were like, US is going to change the game and stuff like that. And I ask sometimes funny questions. And I said, I have a question to the group, 30 people group. I said, how many of you have used a stable coin to pay for a coffee or anything except trading? And we can do this as a show of hands here as well. Only 3 hands were raised. So basically, they want to regulate something that only 3 people have used in their real life. This means adoption. In fact, I can do a survey. Guys, how many of you have actually used a stable coin to buy something real world, not to buy Bitcoin or Ethereum? Can I see a raise of hands? See the numbers there. Adoption is still early. See, the point is, unless...
Ask how many have used 8-hour Bitcoin to buy something real.
So anyone who's used Bitcoin to buy something, unfortunately, I don't like you, because Bitcoin is an asset. You don't use an asset to buy a coffee. Asset to, expense transactions are bad. Buy Bitcoin or buy a house, that's okay. So you shouldn't be buying coffee with Bitcoin. But see, that's the point. What we are explaining to people over here is that please understand, when people say token, it's not so tough to explain a token. A family office that has invested in an equity of a company is buying the future revenue of the company, which basically means if Binance does $100 million revenue, it goes to CZ as the owner. Token is nothing but ownership of process. So Binance has the core activity of trading of tokens. The tokens are basically, the trading fees goes in BNB. So when volume goes up, BNB goes up. So it's nothing different than equity. There are founders behind these companies. There is business model. There is growth, and you have to invest in it. So that education and that adoption where they've used is still missing.
Okay, we are working on it heavily. Yeah. I mean, I think Cardano has been cooking 2025, and you're going to see a difference next year. It's going to boost. Sheldon, changing a bit the sides now. You working on an amazing project, and thank you for that. I mean, we're all looking forward to that happening. It's very soon, I hope. But you're running around looking for investors, as being in the Web3 space, building something amazing that's going to bring tremendous value to the Cardano ecosystem. How is it for you, and is it perceived, to find those investors?
Yes, well, I guess like to kind of comment how it all kind of relates to traditional finance, it's also very deeply tied to these pursuits in finding investors who actually understand, to your point, the use cases, how it all fits together. Because where we sit, I think many of the people here in this room want to be in a situation where we find that traditional finance and the crypto cypherpunk ethos, they meet in the middle in a nice hybrid. That's kind of the ideal situation. And unfortunately, it's generally a bit of a swing back and forth. We see these extremes. And so when we go about, and we've been doing it now for about a year, going around the world, talking to people about Cardano, talking about the use cases that are possible, there is still major gaps of knowledge that just aren't there. They see things through very traditional lenses. And so a point to raise, and it kind of relates to what Nikhil was mentioning about regulation, everybody is still looking at the largest narrative for Cardano being around ETFs or around digital asset treasuries and treasury plays. What is going on there, it's basically like a digital asset that's going to the traditional world with very traditional vehicles that is very slow and clunky. There's very little that's actually Web3 there, unfortunately. So we've got to do what we can to kind of start to bring it back to the middle, that idealized middle position there where there is Web3 components. For investors, this last year has been quite interesting because you've seen basically a move away from pure token plays. It hasn't been a very lucrative time for those who are looking to do projects related to retail. We are very much in a cycle now that is institutionally focused. And so you've got to go with that mindset and be talking to VCs and institutions, looking to cater to, ideally, the banks, looking to talk to insurance companies, looking to actually scale pretty ambitiously. And for some of these institutions, they've been burned the last couple of years, either by degen plays, or they were caught up in this idea that like, oh, open blockchains, we don't need that. Let's build our own closed blockchain and just have it run for ourselves. And we've seen those go badly, be it with Maersk and other large companies that try to build their own structures in place. It just doesn't work. So I'm all over the place in this particular answer to your question, but it's been a very dynamic time, and I would hope that in the coming years, we see an appreciation for using the tech in a more creative way to meet in the middle, where we are able to solve real-world problems. And it's not a popular thing to say in perhaps a crowd like this, but 98% of projects probably don't need a token. Kind of get back to the fundamentals. And so, yeah.
Okay. I mean, that's a good statement. Nevertheless, we have 3 friends here in the row that are actually working on bringing actually traditional business into the new technology. And maybe, sorry to say, I mean, insurance, it's not the most exciting business. But, I mean, Bruce and MembersCap are actually tokenizing one of the oldest traditional businesses in the world.
Yeah.
Want to talk about that?
Sure. And, reinsurance is a strange thing, but think of it this way. So not only insurance companies write policies, reinsurance companies bring an extra capital to them, effectively lend them the capital in exchange for a fee. They let the insurance companies rebalance their portfolio. We stand behind the reinsurance companies. We do retro. What we do is a reinsurance company like a Hanover Re or Munich Re needs to change their risk portfolio. So we'll basically reinsure them. At the end of the day, what does it look like? Sometimes I don't even tell people it's reinsurance. Here's what it is. I have a 1-year duration portfolio that is going to, after all fees, return you 9 to 12%, has zero correlation to the economy. So it doesn't matter what fixed income does, doesn't matter what equities does, doesn't matter what crypto does. We have no correlation. So that's why every major pension fund and large family already owns a reinsurance portfolio. But the industry also is intentionally opaque. They don't want everybody to know how it works because it's really lucrative, right? like our portfolio has a really high return. And of course, you always have the risk of something happening that can wipe out one of your notes. And that's the reality of peril. But bringing it to the institutional market, you know, I was until June the global chief of digital assets for Apex Group, which is, you know, they administer $3 trillion in alternative funds globally. And as an advisor to the firm I now work for, we just wanted to create the infrastructure so that we could accept a digital institution, a digital foundation, who have capital that they need, a treasury that needs to be managed, a balance sheet that needs to be invested. And if you're going from owning a bunch of your own coin and some Bitcoin and then digital cash, tokenized money market, or whatever, you have to step up the chain. I think the next step up is something with a 1-year duration. But here's the tricky part. So we start talking to banks and to other distributors of product and saying, this is a really, really interesting risk-return profile. You have 10 or 11% yield. When do I get it? I mean, like, what do you mean, when do I get it? When do I get it? Once a year is not good enough. If you pay it to me monthly, I'm in. We don't do that yet. Yeah. However, in partnership with some of the people in this room and others, by bringing in a structured product that contains our traditional revenue stream and maybe partnered with a more liquid revenue stream and with a DeFi lending overlay and other technological structuring elements, we're going to be able to get our product into everybody's wallet with a 1-month liquidity cycle.
I mean, I think that's really amazing, and thank you for going the way to make this happen. And I mean, if one of the most traditional businesses is coming on chain or becoming tokenized, I mean, are we close to become mainstream? And the other most traditional or initial business that created actually the banks is the whole lending part. I mean, it's all about borrowing and getting interest, and the one that is digging deep in that, Florian, how do you see that? Is that going mainstream soon? Is that?
Yes, I think there is also 2 other obstacles I would like to add before it goes mainstream. So obviously, as my colleague said, regulation, usability, adoption are key, but I would also say education. DeFi is quite new, so for a lot of people, let's say from traditional finance, like a family office, DeFi works differently, so they need to understand, and also they need to start using a wallet. It sounds maybe simple, but a lot of people don't feel comfortable, you know, using a wallet. What should I do with my seed phrase, etc. So I would say the 4 things that need to be worked on is regulation, adoption, wallet, and also education. Yeah. And to complete with what Bruce said, for us, the main goal of DeFi in the lending field is to democratize, I would say, the access to this reward asset, democratize also the yield, that people can participate to these opportunities. So how it would look like, so a protocol like Liqwid would partner with, for example, a credit gate that has the knowledge to perform due diligence on the borrowers, to assess the credit worthiness, to select the best collateral. Then basically, they would sign a contract with this credit gate. We finance you 1 million at X, and then the credit gate would borrow from Liqwid, and then they would refinance themselves. And I think this is how basically we can offer the access for the suppliers, and also have being able to finance, I would say, at a lower interest rate, these borrowers, that's what they would get from the banks. And this is, I would say, the key to have these products becoming mainstream.
Amazing. Thank you so much. Well, we have covered a lot of the traditional stuff, and what's more traditional than the commodity space? Monty, anything to add on this to make this mainstream?
Yes, let's talk from like vision to reality. Yeah. So a big vision is commodity trading is more than $30 trillion in volumes. And only a small percentage is now tokenized in pilot projects, but it's already a substantial part to the current cryptocurrency industry. So here we're talking about the vision, because ultimately we could outgrow our own industry, becoming 100 times bigger than the current total market cap of crypto and total trading volumes. And that's, I think, where we are now getting started. It had been part of an idea since many years, but we now see it's getting traction. Now, talking about reality is when I see that a lot of these projects here, also as we had been supporting the Battle of the Builders, and the startups being here at Cardano Summit become more tangible, better, like more mature. The projects they are developing are not just core infrastructure, but actual physical things people will use and will lead to more mass adoption. And ultimately there, we also contributed a lot, because at LCX we had been filing a lot of MiCA compliant white papers. These are required now, and this is the legal framework which is required, and this is part of the current reality. We now have a legal framework which is enabling everybody to issue a token the legal way, to apply for registration and trading and centralized exchanges with these publication of these MiCA compliant white papers, and also in other jurisdictions. So this is Europe with the markets in crypto assets regulation, but also in other jurisdictions like the US. They're now doubling down, the Genius Act, making stable coins. Then there will be a Crypto Markets Infrastructure Act. And ultimately, token sales are really back, because it's opening up the US market. Nobody could participate in the past. There was token sales from us, where we did some of the largest Cardano projects launched at LCX, and US couldn't participate. And so now with these white papers, just to conclude, we filed an official MiCA white paper with application for trading for ADA as well. And so that's in the ESMA registry, and we've now filed for many other Cardano projects as well, helping the ecosystem to leverage this reality which we now have and building up on the vision.
Absolutely great. Thank you so much. I mean, I honestly believe that you guys are kind of creating the spark that is needed to ignite the wildfire, and it's going to spread, and I'm sure it's going to spread a lot. I mean, people look at crypto prices.
I just hope it's not a fire that I've insured, that's all.
Huh?
I hope it's not a fire that I've insured.
No. Don't worry. Don't worry. Everything is insured in some way or another, hopefully. Nikhil, to round this up, how do you see that on the tokenization and becoming mainstream? Are we close?
Yeah, I'm going to take the education point and characterize it in a slightly different way. I think a lot of this is sales pitch, right? So when we talk about mass adoption, you can't force people into adopting.
Yeah.
So it has to be sales pitch or hand holding. I think some of that points to blockchain being the slightly less glamorous, but the very critical need. But the rails that operate in the background. In a way, we shouldn't talk about it. We shouldn't have to talk about it.
Yes.
It should be as easy as click on your phone at a point of sale and walking away. And within that, there's then a differentiation between blockchain as rails, and I describe it as a feature, versus crypto as a product. And quite often, we talk about blockchain and crypto as if it is a product only.
Yep.
And I think that's slightly off. And I think that doesn't help unpack some of the conflation that exists within the broader, addressable market, where it is, I'm sure people in the room have this every day. Blockchain, Bitcoin, Web3, crypto, all of these words are used interchangeably, like they're exactly the same thing, right? So it is education, but what I'm stressing is the need to handhold, and within that there'll be certain facets or assets perhaps which are tokenized sooner rather than later. So real-world asset tokenization is a bit of a narrative, and I think we recognize it as such. But there are components of that which are landing sooner rather than later.
Yeah.
I think we can see that stablecoin, which is ultimately a real-world asset, it's fiat, and it's tokenized, right? Is a product market fit, and everyone's got, hallelujah, look, here it is, finally, we can demonstrate to the world what it is.
Yeah.
And then you kind of go down the pecking order of maybe we'll start with more liquid assets. People want to tokenize listed debt, listed equity.
Yes.
Do you need to do that right now? Well, I mean, it kind of works okay on traditional rails. It could be better. Is that going to be the hook, right? That makes people go, oh, I get it. Or would you start with something that would benefit from tokenization sooner rather than later? Like, for example, private credit. And perhaps within that is the more liquid side. Yeah. So what I'm saying is that it's not binary. It's not everything today or nothing today. It's on a gradual scale. Yeah. And to the extent that some of this can be normalized and standardized, and in some cases not even talked about, that is where the mass adoption comes in.
Excellent, excellent. Yeah. I mean, as our industry evolves and the speed actually evolves, so is the time on our panel. Unfortunately, we come already to the last question, and I really ask you, give it 1 minute just to finish that off. And Vineet, I mean, if you look at the speed of the blockchain industry and the Web3 industry, do you think the ventures cope with that? Are they adapting to it, and can they keep up?
So for me, when it comes to venture, I think people are moody over here. When the SEC puts a case on Ripple, suddenly everyone shifts to, we'll only do saves with the token warrants. And then suddenly market goes down and everybody becomes a liquid investor. And then suddenly Trump comes and everyone's a venture investor. So, I think it depends on fund managers, where they have always been, changing their strategies. Mm-hmm. For me, I think tokens are amazing because this is what I tell TradFi. When I go to Sundial in Saudi, I tell them you are investing in this venture fund in the Web2 space, which gives you money back after 8-9 years. If you look at Uber did an IPO in 8 years. Airbnb did it in 11 years. While tokens are something which launch anywhere from 1 month to 3 years. So liquidity is faster. Imagine the IRR you can give to people if you can return them the money back in 3 years. So for me, as a fund manager, I only focus on 2-3 things. My new fund focuses 40% on liquid tokens. Whenever this market goes down, there will be amazing opportunities to buy stuff. If you get a 40-50% discount, you can actually return money back to investors in 3 years. And the venture capital can kick in later and give you the multiples of 5-6x. This is how we can attract traditional capital to come in. So yes, people change, things are fast, but there's something known as strategy as well, strategy to invest. And that's what I see missing. People who build the real venture capital will actually end up becoming big, because Uber didn't raise $1 billion to make an app, to make a flashy app. Uber raised $1 billion to make you lazy, not to stand outside in the sun. How many of these funds have actually done this, or how many of these crypto projects have actually changed your way how you transact or interact? None. Hopefully we do that in the next 10 years.
Excellent. Thank you so much, Vineet. Sheldon, in a nutshell.
Well, yes, so I guess in a nutshell, as we see, the entire space, it's always shifting. There's narratives that come and go. There are particular seasons. And to your point, there are long-term opportunities here for those who stick to the fundamentals. And so we've got to be mindful that the world today and the narratives today will shift again. So as you likely all recall, there was a lot of craze around, as I was mentioning earlier, these digital asset treasuries. I do believe that there is going to be a bright future for those companies that start to add digital assets to their treasuries. But these wild swings in speculation are a little bit out there, but in time, things will stabilize. And we've seen it play out in the space. There's these spikes of mass adoption hype, excitement, and then there's this crash to disappointment, those 40% drops. But if you've got some conviction that this is going to be a long-term play, and I think all of us on stage in this room are convinced that this is a long-term play, you see this through. You strategically deploy where you know there's value over the long run, that there is a product market fit. It can be a lot more difficult to do that than to say it, but you have to have some conviction in this long run. And I think, not to kind of hype it up too much, but when we see some of the largest companies in the world coming around and taking a look here, when we've got Google and Facebook, Meta, and these others who are going to be coming off the sidelines and getting involved, when we see a world where real estate isn't the asset that it was before, and it's a very dynamic place, so it's a very exciting time.
So it's happening, it's moving.
It's happening, without a doubt.
Monty, sorry for the short time. Anything to add?
At the moment, we are at a tipping point, basically from seeing the industry and the institutional capital being afraid to embracing it. So why had they been afraid? Because they didn't understand what's going on, and they had been now learning, seeing. The second is that they didn't see a market fit, like how can we make any money? And now we've seen some of the crypto companies like perp dexes or stablecoin companies becoming the most profitable companies in the world in ratio to their employers. Yeah. And so now they are really embracing it, and that's what's, I think, the very exciting years ahead, where we see how can they actually adopt it with us, together with us, learning from our experience, and that's why we're here.
Great. Thank you so much.
Yeah.
Bruce?
So I don't work at a bank, but I just want to leave you with one thought. Watch the banks, okay?
Yeah.
Because we've woken them up. Stable coins are taking away their deposit base. That's how they make their 300 basis points of free carry. Private credit, DeFi lending is taking away their lending revenue, okay? Yeah. Custody used to be at a bank. You can now do custody with Coinbase. We have been undercutting all their core revenue streams, and we woke them up. And they're going to win. They are not going to be happy if you keep using Revolut and Wise for all your transactions. So something's going to happen. Either Revolut's going to take a run at a traditional bank to get their license portfolio built out. When they do that, the knives are coming out. It's going to be a free-for-all. The banks are going to consolidate this whole thing and make us all rich again, which is good.
Okay. Florian?
So I share the analysis. We are at the tipping point. You know, regulation is there, infrastructure is there, so everyone wants to join. I think also what I'm witnessing is more and more collaboration between DeFi projects and TradeFi players that are building their own ecosystem. I call that institutional DeFi, the merge of these two forces that want to take on the banks, basically.
Yeah. Perfect. Nikhil, 20 seconds. No, 15 seconds.
I should end on something positive. Yeah, it's definitely coming. I agree with what Bruce said. When the banks have woken up, when they've been prodded and forced to wake up, then you know, in a way, normalization is coming. That's a double-edged sword. The mass adoption will come. It'll take some of the glamorous and sexiness out of the space, though, I think.
Okay. Hey, thank you very much. It was an honor to be with you on stage, and I hope it was helpful to everyone here. And I think we are done for today. Thank you.
Thank you.
Thank you.
Thank you.